Hello and welcome back to my channel. Today we need to talk about the US stock market because over the last 48 hours we have seen the kind of price action that tells a deeper story. Yesterday, markets fell sharply as investors reacted to President Trump escalating tariff threats linked to Greenland. But just hours ago, everything snapped in the opposite direction. The Dow surged nearly 600 points. The S&P 500 jumped more than 1% and the Nasdaq bounced 1.18%. And that kind of whiplash is a sign of something bigger. The issue was never the tariff alone. It was the disappearance of predictable boundaries. Today's rebound doesn't erase that story. It simply adds another layer. Welcome back to Think Wealth 6789. I work a normal 9 to 5 here in Singapore and invest on the side just like many of you. Tonight, we are breaking down what really happened underneath the sell-off and why the rebound today still matters for the rest of 2026. Let's start with the obvious question. If Trump called off the new Europe tariff, why didn't the market simply recover everything immediately? Because the fear wasn't about Greenland. The fear was about boundary breaking. And here's the twist. Less than 24 hours after the sharp sell-off, Trump announced a framework deal with NATO Secretary General Mark Rutte. He posted that the US will pause the tariff schedule for the 1st of February. He also repeated in Davos that the US will not use force to acquire Greenland. This calmed markets, but it didn't fix the underlying concern. Investors are sensitive not just to events, but to the logic behind those events. Today's announcement removed the immediate trigger, but the behavior remains unpredictable. Even after today's rebound, institutions, investors don't just flip bullish overnight. Valuation models changed yesterday, not because earnings changed, but because risk premium jumped. Markets price uncertainty immediately. They remove uncertainty slowly. Today's rebound was the technical adjustment, but confidence isn't rebuilt in a single session. This is why all three major indexes, even after today's green day, are still negative for the week. And this is the key takeaway. A rebound is not the same as a reset. The real reason behind the sell-off hit so hard is because it broke the invisible rule. Markets can process bad news, but they struggle when the logic itself changes. This wasn't a normal tariff threat. It was tied to a geopolitical narrative involving Greenland, NATO, and Arctic region, something markets have never had to price before. The fear wasn't the tariff were high. It was that they were tied to something outside the traditional economic domain. This introduces what traders call policy drift, when behavior becomes harder to forecast. Markets dislike what they cannot model. One important observation today, the same tech names that led the sell-off yesterday, for example Nvidia, AMD, Apple, also led the rebound. That tells us something very useful. Investors were not selling earnings, they were selling uncertainty. Once Trump paused the tariffs, money immediately rotated back into high-quality growth stocks. This behavior is consistent with a temporary shock, not a structural downturn. Yes, we saw a strong rebound today, but a rebound doesn't mean the problem is solved. Markets often reverse after a shock simply because positioning becomes overstretched. Today's rally was partly short covering, partly relief, and partly algorithmic flow. But the underlying issue, the unpredictable policy boundaries, hasn't disappeared. This is why institutional investors are staying cautious. Professional money doesn't move based on headlines alone. What they are watching now is this. Does unpredictable behavior becomes a pattern, or was this a one-off spike? Today's bounce was recalibration of fear, not a confirmation that all risks are gone. That difference is subtle, but incredibly important for anyone investing in 2026. So here's the final takeaway to leave with you. Yesterday was repricing, today was relief, and both can be true at the same time. What does this mean? The sell-off told us what the market fears. The rebound told us what the market still believes in. This is why staying calm, staying informed, and focusing on the bigger picture matters more than ever, especially in a year where policy signals can swing quickly. Thank you for watching, and let's continue learning together. If this helps you make sense of yesterday's volatility, do like the video and consider subscribing to Think Wealth 6789. Here we break down markets quietly, clearly, and rationally, one video at a time. Thank you for staying true with me. Stay tuned and I'll see you in my next video. Bye!